Hey guys, what's going on? I want to take a quick look at Dogecoin. Ticker for this is DOGE, and I'm currently on the weekly time frame. Now it's been about 4 weeks since I did an analysis on this coin, and at the time when I did my last video, I think we were right here, and I said that just basically watch this area for a potential breakout because we were right up here, but we were still under this resistance level, right? Since then, as you can see, we just kind of came all the way back down to the lower region. So these two lines are obviously the most important levels on the chart. So if you want to trade Dogecoin, I recommend that you draw these on. We had this massive upswing in the last bull market, and since then we've had a long retrace, but in the process this has formed a bullish formation, this triangle here. So we're nearing the apex. But actually, before I discuss the potential targets, if we do break out of this, I should mention that if you're not subscribed and you want to get notified when I release these videos, I'm going to do about 2 or 3 videos every single day. Just click subscribe, click the bell, click on all. And number 2, if you're looking for an exchange to trade Dogecoin and many of these other coins that I discuss, I'm going to link to the one I use in both the pinned comment and the description. I like it for a few reasons. It's got a lot of coins. It's got a pretty good interface that's easy to use, and it has features that make trading a little bit easier for me. For example, just click and drag stop losses. That I use that a lot. And but best of all, there's no KYC, so they're not going to ask you for any of your personal information. You don't have to submit any documentation to them. Okay, so back to Dogecoin. Yeah, I said if you want to trade this asset, these are the lines you should mark on your chart. We've hit this one 1, 2, 3, 4 times, this lower region, and the upper line 1, 2, 3, 4, 5 times. So, but what you can see here is we're basically, these lines are converging and we're coming to the apex. So if the price stays within these lines, the breakout point is going to be early 2024, so January, right? We're at the lower region of it right now, so if the pattern repeats, we're likely going to make our way back up here. So that could be a potential for a long opportunity with a stop loss just below this support region. But we're getting to the point now where, this trading range is going to get tighter and tighter, and it makes it almost not really worth it to take the trades, right? You might as well just wait it out, unless you went to a short time frame, in which case, yeah, there is a lot of room to go up here, right? So yeah, this would be, if, for example, if you bought, let's see here, if you took a long right here, where's the price? So right here, I mean, the stop loss would have to be all the way down here, which is more than I'd personally like to risk. And then your take profit would be up at the top here. It's not even worth it, guys. That's a risk to reward ratio of 1 to 1.61, 22% to the upside, and you'd have to risk too much, in my opinion, 14%. So you're better off, like for a trade on Dogecoin, either wait for the price to come back up to the top, or wait for the price to come back down to the bottom here. Within this triangle, there's a channel that is formed. So hold on, let me zoom back out here. I'll go to the weekly time frame so you can see it better. But yeah, I drew basically these two lines. So here, let me take a horizontal line to it and you can see it better. So there's the first one. So you see the price has been responding to this upper line for quite a while. This was a deviation, but since then we got rejected here, we got rejected here. So if the price breaks out of this downsloping level of resistance, the first line of resistance is going to be right here again, and that'll be around a little bit over 9 cents. Now, I would think that if we start closing a weekly candle above this downsloping level of resistance, that's going to bring a lot of enthusiasm into the market, and I don't think this level is going to hold. I think we're going to hit these upper targets, right? So the first target I have here is going to be around 14 cents. The second target is going to be around almost 19 cents, and this upper range here is going to be between 0.267 and 29 cents, okay? The way I got that is I took a Fibonacci and I just ran it from the top here down to the bottom, the swing high to the swing low, and that gave me these projection levels. And they also line up with the price action. Now, I don't like to trade just off the Fibonacci levels alone, but when a Fibonacci level lines up with the previous price action, I just take the level more seriously. So you see this one right here, this 38.2 retracement level, it was support right here, okay? This 50% level, it was resistance right here, right? And this kind of golden pocket region, the top of it, was the resistance right here, right? So it lines up with the price action, these 3 levels. So I would anticipate as the price kind of comes up, sellers to step in these ranges. Now, that's not to say you should enter a short, as we will be breaking out of a long-term bullish pattern and the price is likely to go much higher. So don't just automatically short. But within the uptrends, there's going to be pullbacks, right? So this could be an area where maybe you want to take a little bit of profits off. You can long here, get in, take a little bit of profits off here, here, and here. And maybe if you get a pullback, what you sell here, you can use it to get back in, right, and accumulate more coins for the rest of the uptrend. Normally, a pattern like this, you would basically take the high to the low and project it from the breakout point. But so often the patterns don't hit, so I don't really place too much emphasis on that. I more so look at the Fibonacci and the previous price history, the support and resistance levels, right? Now, in terms of a directional bias, as you can see, we're at the lower region. So my directional bias in this instance is going to be to the upside. Again, it's not worth me taking a trade right now. I'm going to wait for the break in either direction. I mean, if this ends up breaking to the downside and you break this horizontal level here, that's going to be a long way down, because you see we weren't putting in, there's no structure here, right? So if this breaks down, I mean, this can come all the way back down to like under 1 cent, right? But I just, more often than not, this is going to break out to the upside, so I'm not anticipating a drop down here. Now, one thing that's interesting, I don't really feel like doing an entire new Bitcoin video today, but Bitcoin has pumped to the upside since the last time I mentioned it. And let me go here. You see we have these liquidation levels, kind of like this order book thing. And last time I did a video, this side here was way bigger than this one. And I basically said that it makes sense that the people who control the market are going to try and take out a lot of the shorters, right, before they themselves push it back down. So I think that's what's happened. And a lot of these shorts have cleared out. And now we have everyone going to the long side. So retail traders pretty much do the opposite of what they should do. So, as the price crashed all the way down, they took shorts, right? And as the price started moving to the upside, they took longs, right? So now we have everyone in a long position here, and a lot of the shorters got wiped out. So they might continue to push it up higher, right, to around the 27.2 range, which is what I mentioned before. That would make sense. And then from there, they might drive it all the way back down, take out all these people here that opened the leveraged long positions. And there's a big liquidity pool around the $24,000 region, right? So it just makes sense for the market movers to move the market in the opposite direction of what most of the retail traders are doing. So keep that in mind if you're trying to anticipate where you think the market's going to move and what do you think is going to happen with Dogecoin. So while Dogecoin is sitting at a support level, it's forming a doji. This is all bullish, and my bias is going to be to the upside, in despite of what I just showed you, because I'm not really sure which direction they're going to take it with Bitcoin. But yeah, right here, the risk reward on the trade, 1 to 1.61, I think it was. It's not worth it personally for me to take this. I would rather just wait it out and wait for a break in either direction, right? Because this trading range is getting very narrow now. But yeah, those are your breakout targets to the upside. Your first level of resistance is going to be right here, the top line of this channel. It's a little over 9 cents, 0.093, and then you have these upper regions all the way up to the 618 golden pocket range. But if this breaks and this breaks, then there's going to be further targets to the upside, which I'll give you when that happens, right? So I'm not going to mention it all in this video. All right, guys, hopefully that helps. Once again, if you're not subscribed, click subscribe, click the bell, click on all, and take care. Have a good day. Bye.